Alexis Christoforous.
Let's start with Oracle because it is down more than 9% here pre-market. Let's remember, though, the stock is up 35% in just the past 3 months. So Oracle, after yesterday's closing bell, out with a really solid quarterly earnings report, a strong AI growth. But what Wall Street's fixating on, and we see this with a lot of companies, is what's it going to be spending on? What are its capital expenses going forward? It plans to spend $70 billion. That is much more than Wall Street was expecting. And, you know, it's a database software company, but it's been refashioning itself as this provider of computing power for artificial intelligence work. So it's embarking on this massive build out of data centers for really its most important customer, which is OpenAI. And so we've got shares of Oracle under pressure today, like I said, down more than 9%. All right, let's move on to Hugo Boss.
Yep. No, I just the silence you just heard is important, folks. Our terminals, the Bloomberg terminal is this concentration, and we all do this. Alexis does it, Paul does it, where we're almost frozen by the thickness of the news flow.
Yeah,
it's amazing.
It's relentless.
NH headline, that's kind of what I do. NH head, and it just gets overwhelming.
It's overwhelming, the funnel of news coming in. That was rude of me not to comment.
Well, I don't take it personally.
I know you don't take it personally, but, you know, I mean, you're not helping me. They want to rename Vet Bill OG, and I'm pushing against it. Give us another stock to save the moment.
I'm all for it. All right, let's go to Hugo Boss and throw a little fashion into our morning. So this stock is up 9%. Frasers Group of England, it's a British-based company, of course, looking to buy the rest of Hugo Boss. It doesn't already own for $2.3 billion. This is Fraser, of course, backed by billionaire Mike Ashley. They already own about 26% of Hugo Boss. Yeah. But Boss has been going through it. You know, they've been hit by softer demand in China because they have those high-end suits, you know, high-end threads. Sure. Persistent weakness in women's wear because they're not just a menswear company. Fraser owns Sports Direct already. They want to add Hugo Boss to the portfolio. They made an all-cash bid for the German label. And Bloomberg Intelligence is saying, you know, at a 4% premium, they're not so sure shareholders are going to go for it, but that there's nobody else really waiting in the wings and something needs to happen for Hugo Boss.
We asked Julian Wilson today, this is KPMG, and about a roll-up in all this fashion stuff. And she said, yeah, that's sort of the tendency.
I have to, it's getting smaller, you know, the industry is getting smaller.
One of my trips over to London for Bloomberg, I forgot to pack the dress shoes. That's a problem. Hugo Boss store in our building opened up early. I got my shoes. Since then, I've been a huge fan of Hugo.
Full service.
Yes, exactly.
I love it.
Thank you.
Let's stick with fashion and go Stitch Fix. The online personal styling service, up 1.3%. It looks like the turnaround started by their CEO, Matt Baer, a couple of years ago, is finally taking hold. They have reversed a decline in clients. They're revamping their personal shopping features, improving the consumer experience. They're posting year-over-year revenue growth, quarter-over-quarter active client growth, still down year-over-year, by the way, on active client growth. Some of the newest ways for clients to shop and engage, AI, of course. It's using AI-powered style visualization tools. I don't know what that means, but it sounds awfully fancy. And things like that are bringing people back, you know, highly customized shopping experiences, bringing people back to Stitch Fix.